How's it going, folks? Markets have held up nicely overnight, but we are starting to cool off, perhaps as Trump's $2,000 tariff dividend starts to come under scrutiny. Let's jump into it right now and see where we're likely to go from here. So as you can see, Bitcoin, not much different to the last time we looked, but we have had some price movements in between times, currently up at $105,607. We peaked out here on the Coinbase spot chart up at $107,450. So that makes a total move from the lows of just over 8.5%. Not a small move by any stretch of the imagination. Big win for anyone who was willing to buy into extreme fear. On that front, you can see that the fear and greed index has flipped from extreme fear up into just regular fear. So we're at a 31 on the fear and greed index. Chances of a 25 basis point at the next meeting in December down to 63.5%. So that is kind of in the balance. But I think what's moving markets right now is already the scrutiny starting to come onto Trump for this fairly outlandish announcement of a $2,000 stimulus check, essentially, that he's calling a tariff dividend paid out to all American citizens except for, quote, the very wealthy. So he's now saying that the remainder will go to help pay off the US debt. This has come under massive scrutiny because basically people are saying that that is pissing in the wind, essentially, that the surplus there is obviously nowhere near enough to make a dent in the US national debt, left over from tariff revenue payments to low middle income citizens to be used to substantially pay down the national debt, vows the US president. So this all blew up, mainly centered around a Wall Street Journal article, I believe, basically criticizing the announcement, how realistic it is, and whether or not it's likely to actually come to fruition. All that remains to be seen, but Trump is, of course, doubling down on this. So this account reposts Trump's Truth Social posts, which is where he made the initial announcement. He also went a step further to say that he was going to offer a bonus of $10,000 to certain federal workers that didn't elect not to continue working during the government shutdown. Because as I understand it, it was essentially their obligation to continue working despite the fact that they weren't getting paid, but that's clearly not enforceable. So in his own words, and I'm paraphrasing here, all air traffic controllers must get back to work now. Anyone who doesn't will be substantially docked. For those air traffic controllers who were great patriots and didn't take any time off for the Democrat shutdown hoax, I'll be recommending a bonus of $10,000 per person for distinguished service to our country. And a slightly more recent post here regarding the tariff dividend payments. All money left over from the $2,000 payments made to low and middle income USA citizens from the massive tariff income pouring into our country from foreign countries, which will be substantial, massive and substantial, will be used to substantially, again, pay down national debt. Thank you for your attention to this matter, President DJT. So it is all rather blowing up. Whether or not he's actually going to be able to make good on this, whether or not he clearly wants to make good on this, whether or not that is even possible and what that's actually going to look like remains yet to be seen. I don't think that's why we're pulling back. I think we're pulling back because, once again, you guessed it if you've been following, long liquidations. Just like I spoke about when this news was initially breaking, clearly a lot of people jumping in over leveraged on that. Markets are efficient, particularly this market in 2025 when we've got the internet, we've got phones in our hands, everyone is watching what's happening all of the time. The odds of you being able to take edge from a news announcement like that, even if you were scrolling Truth Social at the time that that announcement was made, are very, very slim. And once again, retail piles in on too much leverage, and then when prices pull back, as they always must do, markets just don't move in one direction, at least not for a particularly long period of time. Those long positions get liquidated, and you can see $188 million worth of long liquidations over the last 24 hours. That's not a massive amount, and that is why we haven't pulled back a massive amount. But just be aware, if you're getting liquidated, you're not in the game, and you have to be in the game in order to stand even a tiny chance of winning the game, whatever that means. But if we look at where the liquidation levels stand right now, you can see on the daily time frame, we are pretty balanced to the upside and the downside. Okay, fairly balanced cumulative long and short liquidation risk in the market, but we are slightly closer where we're priced right now to realizing that long liquidation risk. So I wouldn't be surprised if this pullback continues a little bit. I think really what markets are waiting for is an end to the government shutdown, and we are yet to see any further resolution on that just yet. Same as yesterday, same story as last time I spoke about it. The Senate has voted in favor of a bill to end the federal government shutdown, but that hasn't actually materialized yet. So conceptualized or summarized very nicely here. In short, the US Senate has voted to end the longest government shutdown in the country's history, which has lasted for 40 days. By the way, longest shutdown in history, the odds of that ending statistically come closer with every day that passes, just by virtue of the fact that it has been the longest history that's ever happened. Just a side note there. 60 senators, including 8 Democrats who voted with Republicans, decided to support the advancement of a House-approved funding bill. What's next? The Senate approval means the package will now go back to the House of Representatives to be passed again and then sent to President Donald Trump for his signature. So we are getting to the point where we're going to see resolution on this. Do expect volatility when that finally comes. I don't have a good prediction for you of when that might be. You can see the S&P has been rallying on this news, and also in part, I am sure, due to that $2,000 stimulus check that has been promised. Whether or not that promise comes to fruition, we are yet to see. But if you want the nutshell take on that, essentially that is liquidity coming directly into the markets. And what happened last time, those were paid out during COVID times, was Americans went and spent a great deal of that on risk assets, and in particular a great deal of that on crypto. This has been well documented in history. So there we go. Don't be surprised if we see a further cool off from here, but I mean 8.5% up from the lows. I think that is pretty good going, and we are getting to the point where this doesn't look quite so terrible anymore. But that is exactly why I think there is still room for more pain in this market. Still, technically speaking, in fear, at least on the fear and greed index. Remember, markets don't like uncertainty. So when we see an end to the government shutdown, if we see that, hopefully we will, that is when we will start seeing more clarity on monetary policy. That is when we will start seeing more clarity on things like the rate cuts and the potential return to quantitative easing. And we also are waiting for clarity on that $2,000 stimulus check coming from Donald Trump. There we go. That's what I'm looking at right now. That's where I see things going, as always. Absolutely not financial advice, purely my opinion, purely for entertainment purposes. But thank you so much for watching. Plenty more to come. Catch you in the next one.